Lately, I've been listening to group chats, and whenever I'm talking to other traders, they say something like, "I can't call losses because I'm out of day trades," or "I can't lock in profits because I'll be marked as a pattern day trader." So, why would you put yourself in a situation like that? But for today, I experienced that for myself. But I had a little bit of risk management that I set for myself. I had a plan, so I didn't have any more day trades. But as of today, I would have been able to sell because I bought a stock yesterday. I would have been able to sell today, even if I didn't have any day trades. But the risk management I did was I only staked 10% of my portfolio, and I was comfortable with that. So here is a little bit of explanation of how the pattern day trader rule works, and is it good or is it bad? How can you use it to your advantage? Hello guys, it's Luis with the $1,000 Robinhood Challenge for 2017, and today I'm going to tell you guys why it's important to understand the P.D.T rule, the pattern day trading rule. But first, let me go ahead and talk about what happened in today's trading session. So today, the market overall in general was down, but I managed to be up a little bit above 5%, and our portfolio is now at $1,415.78 as we speak. Overall, for the month, which is what I'm mostly looking at, we're at 26%. We should be hitting at an average of 28% to stay in our goal to hit about $20,000 in a year. But let me go ahead and talk to you guys about what happened today. So I was in a stock, and first let me explain what the pattern day trading rule is. So if you have a sub $25,000 account, meaning you have less than $25,000 in a margin account, you are only allowed to buy and sell, or when you're shorting, sell then buy three times per every 5 business days. Meaning you can't do that four times in one day within the business period. If you do, you'll get marked as a pattern day trader, which then will cause your account to no longer day trade, which means buy and sell of the equity or stocks that same day for 90 days. So that's what that means. And there, I got that P.D.T rule. So going into today's trading session, I already had used up my 3 day trades, and so I was swinging a stock. This is what happens when you wake up late. I didn't have a stop loss because I was only within about 10% of my account, so I had made room for the stock. If it were to go down, I would average down, or I had an option to cut my losses at 1 to 3%, whichever I was looking at the charts determine. But since I woke up late, the stock that I was in dropped about 4%, and so I didn't get the chance to hit a stop loss, which I could have done that, and then I wouldn't be able to buy back because I was out of day trades. So what I did instead, I averaged down, and I wasn't going to be able to sell it today. So you kind of get stuck if you don't have a plan. So what I did was I made room for the market. The market showed me what it was doing, and I adapted. So original plan was to just cut losses. Again, I didn't wake up on time, so then I switched my plan, my strategy, to just average down. It worked out for me good, but now I wasn't able to sell that to lock in those profits. So tomorrow we'll see how it goes, and we'll go from there. But I wanted to talk to you guys more about why it's basically important to understand and to have a plan dealing with the PDT rule. Now, this a pattern day trading rule doesn't take it an account if you have a cash account. And a cash account means you'll be able to buy and sell stocks how many ever times a day you want, but you have to have the funds available. So when if you buy one share of stock X and you sell it that same day, you won't be able to get receive those funds back immediately, which in a margin account you will. So that's the only difference about the cash account and um, knowing that pattern day, the PD2 rule. So from then on, lessons that we learned from today. Have a plan. Again, my plan was to cut losses. At 1 to 3%. Woke up late. Now, the second thing we learned from today's trading session was adapt to the market. Again, guys, the market's there to serve you. It's not the market's not there for you to serve it. So the market tells you, gives you numbers, it gives you a quota, and you determine what to do with that. So I decided to adapt, and I decided to one of my strategies was average down. Now I don't always do this. Like I said, just adapt to the market. Overall, in general, the market was down. The stock I was in, I went down. Beginning of opening the market, then later on I averaged down, and I ended up green for the day. Third thing we learned: understand the P.D.T rule. If you're paper trading, or which means you're just trading on with fake money, either online or literally on a piece of paper. Understand all the rules, most of the rules at least, before you actually invest your real hard-earned money and risk losing money. Um, so within our goal for the year is to hit $20,000. I'm changing that goal as of right now. Because I want to talk to you guys more, a little bit in depth of the PDT rule. So now, is it good or is it bad? So some people might say if I had more than $25,000, I'd be in and out of stocks um, on a daily. Now let me go ahead and show you guys a little example what you can do if you did have a $25,000 account. Basically, you could call it what they call is scalping. It is buy the highs, buy the lows, sorry, sell the highs. So I would have bought right here, sold right here, bought right here, sold right here, bought right here, sold right here, bought again right here, and sold right there. Now in theory that works really good because you can see what happened in history in the past time. It's harder to do that when you're doing it live and trying to predict the future. But that's one of the things people say, that if you have a $25,000 account, they'll be able to do. So basically, day trade unlimited. Sure, you can do that. Like I said, if you know the future. Another thing people say is with $25,000 account, they could just cut the losses really quick, or and then buy back. Yeah, you can do that too. Which, in a sense, basically means day trade unlimited again. Other thing I can think of that uh, people could say about $25,000 K account is um, that's it. That's all I can think of right now. But to get to here, what do you gotta do? You have to be disciplined. If I can spell discipline. I'm not a good speller, as you can tell. You have to be disciplined. Why? You have to be disciplined in order to save 25K, earn it, whether it's from your job or from trading into stocks or other investments. You have to be disciplined enough to keep it. Because once you go underneath 25K, the P.D.T rule takes into effect, and you have to be patient. Like I said, in order to save that much money, to earn it, with either it could be steps, as of what we're doing basically with the 1K challenge. We're estimated to do that to get to $20,000 within a year times period, earning 28% in average of a month. Um, in the stock market in general goes between 8 to 10% a year in average. So we're trying to do something that to beat the stock market. Basically, that's what we're trying to do. So my official goal now is to hit 25K by the end of this year. That's what the new goal is. Why? Because I'll show that I'm disciplined, show that I'm patient, could earn it, could save it, and I could keep it. Another way you can have $25,000 is by a gift, someone giving you that.